Alright guys, what's going on? Welcome back to episode 2 of Process over Profits. This is going to be my course on how to day trade and go from absolute complete beginner, knowing nothing about the stock market, all the way up into um, knowing what to do, knowing how to execute a trade, knowing how to exit a trade, knowing everything there is to about the market and how to go off on your own. So, last episode we talked on, what day trading is, the importance of each aspect of day trading, and also kind of what other people do and what you shouldn't do, and what prop firm was, how prop firms work, how to, actually apply yourself into the market. So if you haven't watched that video, please go watch it. That's definitely the first step. A lot of detail on that you should, obviously not skip out on. Very important. Go watch that. But today we're going to be talking about um, strategy and which strategies to use, which strategies to avoid, how to kind of find the strategy for yourself. This is a very objective video. I'm not saying you have to use my strategy. I'm just going to show you what I do personally. Um, and I will get more into that in a second. But we're going to hop into the actual charts. You're going to see how candlesticks move. You're going to see how, um, you know, the market is pretty much made in a somewhat live market. So um, let's get into it. So let me show you the chart here. So make this small. Okay. So let's go like that. All right. So these are candlesticks. These are essentially what shows you what the price is doing, where it's going, how it moves, all that stuff. The market is closed right now. That's why it's stopped. It's a weekend. Market is not open on the weekends. So before we get into this, let's do a little sessions. So actually, let's go market market sessions. Okay, so we have one. First session is going to be your New York session, and then second one is going to be Asia session. Third session is going to be London session. So, what does this mean? So, New York Stock Exchange opens up at 9:30 and it goes to right around 4, whoops, p.m. So a.m. to p.m. And then the markets usually close from around 4 o'clock when the New York Stock Exchange closes, and it opens at 6 p.m. Eastern. This is all Eastern time, by the way. So EST because I'm in Eastern. So then we go all the way until 3 a.m. And then London takes over from 3 a.m. all the way until I believe it's 6 a.m. You're thinking there's a gap between London and New York. That's called New York, excuse me, that is called New York pre-market. So New York pre-market is um, 6 a.m. until 9:30 a.m. So that is essentially the sessions and how the stock market has its time frames. So with that, you can technically trade any one of these Uh, let me add here that it is Sunday, 6 p.m. it starts, and it goes all the way until Friday. Uh, Friday. Hold on. Make this a little bit neater. Friday at 6 or 4 p.m. So that's how it works, okay? So stock market opens up at, in the beginning of the week, Sunday at 6 p.m. and that's technically Asia. That falls under Asia session, and it goes into London session. And then Monday morning at 9:30 a.m. we go into New York session. Typically, you only want to trade New York session, okay? That's where the volatility is. What do I mean by volatility? I mean that's where you're going to have the most action going on and it's not going to be slow and you can actually make quick and decisive moves in the stock market. Um, because my number one biggest rule is the more or the longer you are in a trade, the more risk you are, the more risk you have, I guess I should say, the more risk you have. That is my golden rule, okay? That is what I live, breathe, and eat and shit by. The longer you're in a trade, the more risk you have. The more risk you have for some, Trump to tweet out something and then the stock market goes haywire. Anything could happen with with that. So you want to be in and out of these trades as quickly as possible. Um, because in my experience, I had been in a solid trade and all of a sudden just boom, I get stopped out off this big crazy candle that no one saw coming and there was no news, there was no nothing, it was just, some random thing. A bunch of people just sold a bunch of stuff or bought a bunch of stuff and it just screwed me. So the way I could have avoided that was the longer you're in a trade, the more risk you have. And also the more trades you take, the more risk you have. That correlates right to the longer you're in a trade. So the more trades you take, the more risk you're putting on yourself, the more risk you're putting into the market. You want to take your win and you want to get the hell out for the day. Or you want to take your loss and you want to get the hell out for the day. That's it. That's why I have a 2 trade maximum per day because there's no reason to have anything more than that. It's just really not worth it. So, you take your 1 or 2 trades and you're done. But I would say that's one of the biggest things right here that you should add to your rule book. Um, have a set limit of trades per day and don't deviate from it. You probably will because you're not going to believe me, but I'm telling you right now, once you realize you've lost a lot of money doing this and you need to turn your life around, you need to turn it around because it's never going to work out until you do that. This is going to be the rule that you want to fucking put into place, okay? So, with that being said, New York session only. This is going to be your number one. I would say if you can't do that, your number two would be London, okay? And try and avoid Asia as much as you can because that's it's crazy. Okay, so with that being said, let's go into kind of how I trade. So we're gonna go to, I'm gonna do in a replay mode. So we're gonna go to some random, just gonna scroll back, 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 some random date, replay. We'll start here, scroll down to the price. Okay, so what time is it? We'll go to the New York Open. So what time is that? 9 o'clock. So let's zoom in here, run the 15-minute chart. So, okay, we're at 9:15 right now. So the next candle, because we're on the 15-minute chart, and we can cycle through. There's all these different charts. So we got the 15-minute, we got the 30-minute, 45-minute, your minutes section, your hours section, and your seconds section. Typically, don't do the section or the seconds. Tick is good. Tick chart's all right, but you got to know how to read it. Typically, I would just pick, you know, either the 1 minute, the 5 minute. The 5 minute is a lot less noisy because you can kind of, see the structure a little bit better, um, and kind of get an idea better. So I typically try and do the 5 minute. The 15-minute is good for the first like 2 to 3 candles of the morning session because you get an idea of, okay, we're obviously going up or we're going down. But those are your time frames, okay? And no matter what time frame you do, the price is always doing the same thing on each time frame. It just prints a different candle at that like let's say we're on the minute and it's 15 or we're at 9:15 right now. If it goes to 9:16, a 1 minute candle will print another one. But on the 15-minute, it'll still be the same candle because that next candle will print at 9:30. See what I'm saying? So, with that being said, we can scroll out, and this is what I do every single morning. So, I kind of zoom out on the 15-minute chart. I look for these candles. See how these candles have this one down here has a big wick. That's what we call like a wick. There's the body of the candle that is solid red or green. Um, and the wick at the bottom means that price came down here and then came back up and closed up here. And then it started right here and then price came down here, closed back up here, or actually it closed up here, went up here and then closed back down here. And then price went over here, went up here, came back down, down here, and then closed right here. So see that pattern? Like if the candle goes, let's say, like it, this is the other candle, the previous candle. Say it's a green bullish candle, and it closed right here, right? So the next candle is gonna start right there, and let's say it goes down here, comes back up, closes here, and then that's it. That's how candles are formed, essentially. Um, and that's it. So what I do is at these wicks, those are big liquidity areas, and I will go into a video on liquidity and how to look for that. What is liquidity? Essentially, liquidity is just a bunch of orders that people put there, um, and are waiting to get filled. So the market naturally wants to go there and fill those orders, so you can use that as targets. So I would, mark out that low and be like, okay, this is my area that I'm interested in. And it also has some up here too. So up there's a lot of people that put orders here to go short or go long, whatever they want to do. But the market makers know that, and to be able to get, liquidity to be able to get orders filled, they have to hit these points of interest to be able to do that. And what really helps is, say like this down here, there's relative equal lows. So this equal low, kind of this one over here. There's a lot of liquidity down here that you can mark out versus I don't really see anything to the left over here. There's really nothing. There's a lot more liquidity down here than there is up here. So that's how you kind of form your bias into thinking, okay, we're going to be going bearish. Bearish means down, bullish means up. So we're thinking we're going to go bearish. But you don't ever want to assume anything because you just never know. So let's go to the next candle to see how I watched the 15 minute on the opening and we'll see how it so it swept out this high. Okay, so this high no longer has any liquidity on it because it got swept out. So we delete that and you could say like, okay, we swept out this high. Now we're going to be looking for a reversal back down to sweep out all these lows and all these lows and all of that. But typically, we never want to guess. We want to let the market show us what it's going to do. So we're going to go to the next 15-minute candle, and it went up even more. And now we're going to go down to, let's say, the 5-minute. So now we're down to the 5-minute candle. Let's see what happens here. We're going to look for a reversal. So we're just sitting on our hands right now. We're not placing any orders. We're just watching. And now we're thinking, okay, it's starting to slow down a little bit. These wicks show us a little bit of rejection, but we don't want to jump on every single one. We want to wait and look for an actual change in delivery. So see how it's starting to come down more now? We're coming down. It's starting to slow. And what I've noticed is a lot of the times this fake push down is a trap. So there's a lot of people that hit sell up here that push this move down. Would the market makers know that, so they want to take this liquidity again and then shoot. So we'll see what happens. It might not do it, but it you can almost guarantee it probably will. So we'll see what happens. And we can almost bet that we can put our order right here. Let's say if we put our order here to go short and we put a stop loss just a little bit above it, like 30 points, and we target, I would say probably, you don't want to target a whole lot, but you can target like right there, like 85 points. That's a good, a little bit over 2.5. Let's see if we get filled. Not yet, it's rejecting. Okay. I don't know if that trade would have tagged you in, but it, I mean, it pretty much almost did. If not, the idea was right, so that's all I was trying to convey is that, you have your order up here. You don't want to get in on this fake move down here because it's always the fake. And then you wait for it to come back up, sweep out the top, and then deliver. So that is kind of my strategy. That is how I, use the Nasdaq and how I trade the Nasdaq. Um, so this one would have been a longer trade just because it took like all day to get there. But typically, once it gets to a certain point, you want to have like a point of interest to kind of de-risk or take profits. So let's say like your point of interest is like if it closes past this candle right here. And I'll get into why this candle is piquing my interest right here. But let's say the price gets here, right? So let's say it closes there, which it did on this candle here. Now we move our stop loss down to break even. So if it comes back up and hits up here, we don't lose any money. We just broke even. But we can also de-risk right here. Let's say we're in for like 2 contracts, right? Um, we would take one contract off right here and then go break even, and that will guarantee us profits. It'll guarantee us money. That way, if it comes back up, swipes us out, then you know what? We won some money. We got a W. And if it goes down here and hits full take profit, then that's cool too. But typically, that's like the style of trading. That's pretty much what I do every single day. But you really don't need any single strategy. I would say like maybe popular strategies are like ICT is probably the most popular one. I use ICT concepts like I don't know, just as like a directional thing. I don't really trade it specifically. I have more of like a um, I guess you could say like intuition sort of trading, and a lot of people are gonna be like, that's crazy. But that's just how I do it. That's how I personally have been able to make this work. So that works for me. And then you got, orb breakout strategy. Orb breakout. So orb breakout is pretty much in terms, market opens at this level here. This is, say this is 930, right here. That's a terrible arrow, but so, market opened here, right? And um, you get a push to the upside, right? That's where the market, and then after market open, it pushes up. The, essentially, it comes back down, it tests this area, and then you get a reaction out of that area, and then you go long, put your stop loss below that, and you target, previous high or whatever your targets are, and then, you know, it should go up. That's or breakout essentially. Um, but I don't trade that. I mean, there's obviously a lot of people that make it work, and there's more techna, Jesus Christ, uh, technical parts of that strategy that I didn't go into, of like which candle to use for the orb breakout, all that stuff. So before you guys say I don't even know what orb breakout is, I do. I'm just not getting into it because there's a lot of friggin' detail, okay? So, orb breakout, and then ICT. And typically, a lot of people do, what is it? Supply and demand. So, supply and demand is you have a high and a low. Or let's just do this on, uh, like down here. So supply and demand would be like, um, this is a good, not a good example because there's no like top liquidity. So I guess you could do this. So this is like your supply and demand. So we got that low right there. Let's just use this for example, or this one might be easier. So you have this low and you have this high. So this is your supply zone down here, and this is your demand zone. So supply and demand is pretty much like, oh, price is right here. We're gonna wait for it to come down to the higher low, see what happens. Does it reject off of it or does it break through it? And that will give you you know, your trade right there. So if it rejects off it, okay, you're going long. If it breaks through it, comes down here, okay, you're going short. The now floor becomes the ceiling and vice versa. It breaks through the ceiling now becomes the floor. So that's pretty much all supply and demand is. But typically, there's so many strategies out there, guys, and that you can kind of learn and pick your pieces. But typically, you just want to really hone in on that psychology factor. I'm probably going to bring this up in every single video, so I hope you guys actually are listening to me with the psychology thing, because that is what is going to make you profitable and what is actually going to, in the long run, make you be able to make a living off this. You could be the best ICT trader, the best or breakout strategies trader. You could be the best supply and demand trader. And if you don't have psychology, that's none of that's going to make do anything for you. It's not going to make you money in the long run. It's not going to do anything. You could be the best trader in any of these strategies, and you're not going to make any money because you can't take a loss, because you can't just lock yourself out after taking a loss and be okay with it. So that's the biggest thing that you have to do, is to have discipline, have a rule set, write down a bunch of rules. Typically, these are my rules. So we got rules. So my first rule is 2 trades max per day. If I do, usually it's one win equals done, or 2 losses equals done. So I typically don't go over a whole lot of money I'm risking per day. So I will 2 trades max. If I win the first one, I'm done. That's it. I'm done. No more trading. I don't care if it's an A plus setup, bring it in front of my face, slap me, going, "Hey, trade me, trade me." I'm done. I got my win for the day. We are fucking done. That's it. 2 losses, and you're done. You do not need to trade anymore. You do not need to risk any more money for that day. You are not in the right headspace to be trading for that day. There's no reason to trade for that day. If you have 2 losses on a day, are you kidding me? You're gonna try and make that shit back? You are not, guys. It pisses me off when I see people just take L after L after L, back to back to back to back to back. It's like, what the fuck are you doing? What are you doing? You're trading like 5, 6 times a day and you're taking loss after loss. You're risking your whole account. You're risking all the hard work that you put on for the last week, and you're just blowing it all in one day. What the hell is the point of that? That makes no sense. Anyways, I digress. Um, and then my second rule is, let me pull it out here. It's the $500 per 1 micro. So we got $500 equals 1 micro. So what is a micro? So a micro is, so you see how there's on the symbol here, the NQ for E mini NASDAQ 100 futures. That's what we trade. That's the market that we trade. Okay. They also have a micro version, MNQ, and that is essentially, micro is a smaller version of one contract. So one contract moves $20 a tick, okay, for one of these contracts, one of the minis. Kind of confusing because it says mini, but it's actually the bigger version of a micro. So it goes micro, mini, okay? So a mini, one contract moves $20 every tick, and a micro, it's either a tick or a point, I can't remember. Maybe someone can correct me. But a micro is $2 a tick or a point. So you see how like you can de-risk with that. So let's say we're going for like a, I don't know, like an 80 point or like a 30 point, something like that. Or maybe like we're going for like 50 points or something like that, right? You see how like using one micro is a lot better than using one mini. Like, and you can also scale out of it too. So let's say you have like a buffer of, um, let's say you have like 5 grand in the account, right? You can use one mini at that point, but you still want to use micros because one micro, or sorry, 10 micros is the equivalent to one mini. So if you do 10 micros, you can scale out and secure yourself profits. And if you're only, say if you go in with one mini, one contract mini, you can't scale out of that because you'll just take your full position off if you sell one contract. But if you're in a trade and you're at a level that you're like, okay, I'm up like, let's say I'm up like $500, right, on this trade and my target's 1,000, and I'm in with 10 micros, I can take 5 micros off of that trade and let the other 5 ride to my full TP, or it comes down and, stops me out at break even. So that's the power of using micros. You can scale in and out of these trades very, very, like very, very good, essentially. Jeez. But it's so important to use micros and, see the power in them. And that is typically um, my idea of, what to trade or how much to use on my actual trades. So, and then my next rule is go, a lot of people are going to be mad at me for this too, but go break even ASAP at levels. So if there's no levels that you can see like that kind of stack up to be able to go break even, like down here, if there's no, see how this just like pumped up? There's really no levels. Like we're in this trade, right? There's really no levels to go break even at. I mean, you maybe could use each candle as a section to go break even. So boom, right there, you go break even, or boom, right there, you go break even. I mean, it's not ideal. You can do that, but it's not ideal. You typically want to see, something like, I'll just draw it out. So typically you want to see like a move up like this, like that, and then we get a change of character, and we're taking a short now. We typically want to see our levels like this, so we want to go, that would be our break even spot, and then our full TP would be like down here or something, right? So that'd be our full TP. But we typically want like our actual clear leg to have our break even at. But like I said, you can with like this is a good example where it is pumped up. There's no kind of clear indication like this. So it's a little bit harder, but that's why I always say just go break even, as soon as possible because you never know what's going to happen in the market and you want to avoid risk and you want to avoid taking an L. Um, and a lot of people say that like online that, go and break even, you're a break even trader, blah blah blah. It's bad, it's bad. You gotta have faith in your model. Well, you also have to, be able to psychologically not jump into a trade. You gotta have the okay of okay, if this comes back down and stops me at a break even because I went into and then it goes up to my TP, you gotta be able to be okay with that. Like that's where the psychology factor comes in. A lot of people who get mad and blow their accounts because they go break even a lot are the ones that don't have their psychology locked in because they got FOMO'd, fear of missing out. They want to get it back into that trade to get that money that they thought was theirs, but in real reality, they just have to be done for the day. So and then also, my last rule is one, or not my last one, 1 to 1 at least. Uh, what was it? And trail and trail stop loss. So what does that mean? So trail and stop loss is what I mean by that is in profit. So let's 1 to 1, right? So we're gonna at least do if we're risking 40 points, we're at least going for the exact same. And that's what that means. So trailing a stop loss is like this. So let's say the price comes down, we got in a trade here, comes up, comes like this, and it comes down, does one of these puppies, starts going down. We're now going to go break even because it hit our break even level. We already marked that out, right? So it hit our break even level. Now we are taking our, if it keeps going down and, going towards our level, we're going to take the stop loss and we're going to bring it down here into profits. So our order is still filled up here, but we're going to trail it down into profits. So if it comes back up here, it closes the full position here rather than it going all the way up here and closing us out way back up there. So that's what I mean by trail and stop loss is you can really get the max RR with this. And you can also do something like this. So let's start fresh again. Let's say we are in a short, right? Stop loss like right there. We're targeting like let's say we're targeting like right there. Okay. So let's say we're in the trade, boom, boom, going in our favor, and then we go break even, right? We're gonna break even, and then it's going more, more, and then if let's say it's like really going down there aggressively, obviously we're gonna take our stop loss, we're gonna trail it, and we can also take our take profit and go to the next low area and then just see what happens, see if it goes, but because it could really bust down and you're just giving away more profits. You see what I mean? And then as that's going down, we follow, we follow, we follow, we follow. You following? And we're still filled way up here. So now our original zone that was way up here and our target that was right here is way down here. We're still in the trade way down here. And then we'll just see what happens. We'll follow that really tight and we'll see what happens if it smashes through or if it went back up and cleaned us out here. It's a lot better than, taking the profits up here. So that's why I say trail stop loss because you can, some days where it's really volatile and you can secure a lot more profits than you were expecting. So that is a big one and I suggest doing that. But typically, I also have a no Asia rule, no trade in Asia. You can watch Asia and see it, but the volatility in Asia is like non-existent. Trust me, guys, I have tried trade in Asia um, for months and months and months, and yes, you'll get some wins off of it, but typically I don't trade Asia because it's just not fucking worth it. So don't trade Asia. Just don't do it. Take my advice. If you don't believe me, go try it out and you'll see. But don't trade it. Those are my rules right there. That is how I become profitable. That is a system that I follow every single day on my trades. And it has made me a lot of money. I actually went and added my, pulling out the journal again. I went and added uh, my win and loss. I don't know if you can read it, but I won. I mean, I spent a little over $18,000 this year on account fees and all that stuff, and my payouts. I think it might be backwards for you, but I've spent little over $18,000 in payout fees and activation fees with TopStep, and I've made with my payouts $36,000, a little over 36. So my net profit is a little over $18,000. So I think that's pretty freaking good for my first year of trading, and I have been able to, be profitable with them and, obviously quit my job and do this full time. So this is now all I do. I literally don't do anything else for income. This is my income. So if you guys don't believe me, then I mean the proof is in the pudding here. I'm able to survive and make money without having a full-time job. So that's it. Yeah, so pretty much that's all I want to focus on for today. Rules, strategies, and I gave you an example on like what the market looks like and how to, where did it go? Oh, down here. Like what it looks like and how to kind of identify the candles and all that stuff. So with that being said, next episode is going to be pretty much solely based on psychology. It's probably going to be one of the most important um, I'd say episodes in this whole process over profits, mentorship. So please, when you watch that video, come prepared, sit down. It might be a long one, but have a notepad. You should have a notepad in all of this and write stuff down and, setting up your notepad in the way that you want. It's going to help you because when they say writing stuff down helps, man, I tell you what, I didn't start writing stuff down until about like 4 months ago, and it changed the game for me in ways you cannot imagine. I can't even explain it. It's just something in my brain just clicked, and now I just want to follow these rules because I've written it down. If you don't write it down, you're just kind of robbing yourself of getting to do this full time sooner rather than later. So please do it, and come prepared at the next class. With a clean slate and really ready to hone in on that psychology because that's what it's going to be. So with that, I will see you guys in the next video, next class. And if you guys ever want like one-on-one live, talking to me and asking questions and all that stuff, I do a free mentorship on my um, like in my calendar. I will post it in the link in the description. So book a meeting with me. They're about a half hour each. Um, Typically like to give other people a chance to get in there too. So half hour. If I don't have any appointments, I'll let you. You can just ask if we can extend it, and I can probably do that. So um, yeah, book a meeting with me. Ask questions if you need to. Like I said, it's all free. I'm not charging anything. So this is all just purely for me to keep busy and me to teach people and get to the level that I'm at right now. So with that being said, I will see you guys in the next video. And remember, come prepared. Later.